economy can perform at where we were in 2006 and 2007, you know, with that 6% real GDP growth rate. I think we can anticipate good growth going forward, good solid growth with a lot of opportunities, but we might have to lower our expectations a bit. And with that, I will conclude or stop talking. I've used up all my time here. I will just point out real quick, if you are interested, myself and another economist at ATB Financial, we do what we call a daily economic comment. It's a one-page, real quick and easy to read little thing, comes out every morning. No economic jargon, just nice and simple text with usually a little graph that goes along with it. And it's always on some aspect of Alberta's economy. And we do try to pay attention to what's going on in the forestry sector occasionally as well. So you can go to atb.com, look for the box that says Daily Economic Comment. You can subscribe. It's entirely free. And then on Fridays, we've got a bigger package of information that comes out. And I also, on Twitter, if Twitter is your thing, I want to tweet you nicely. So I offer a couple of tweets each day, just general observations about what I'm doing or things I'm noticing in the economy. And my little handle is AB Economist. So with that, I thank you for your attention. And do we have any time for questions and answers? Okay. I'm happy taking any, or if you have other comments you'd like to make.
Christine Woods, and I'm not working at the moment, and so my question is, the banks never seem to lose money, but their charges consistently go up. When we're in this type of an economy, why do you guys not give people a break, especially in small business or as families? Because seniors always get it.
Boy, now would be a good time for the lights to go out. It's a good question. It's a legitimate question. You know, and it's a question I'm sure a lot of Albertans share. I can't speak directly, and I won't speak directly for ATB Financial and our pricing structure. We're a follower in the market, so we follow what the other banks do. But what I can say for the banks is they are trying, you know, the big banks are trying to recapitalize. They took a big hit in 2008 too. Fortunately, our banks and financial institutions were not ever on the brink of going bankrupt like they were in other parts of the country. We did always have more conservative lending practices. Bank fees, I mean, this is the way banks make money, and of course on the spread. So they're trying to recapitalize. They're trying to, I mean, it's a competitive market for these big banks, and they're trying to prove to their shareholders that they're getting equity for their, or value for their equity stakes in it. We do believe that the banking sector is competitive in the country. So if any of those fees, you know, are getting out of line, people do have other choices. And ATB and other, you know, banks, we welcome competition like that. But I do hear your question. I don't know if I've answered it very well, but yeah.
What would ATB forecast that Canadian dollar to hit? I know that's kind of a pie-in-the-sky question. I'm just kind of curious, you know, some economists are forecasting it to exceed that $1.10.
Yeah. We don't do pinpoint forecasts at ATB. I am sort of the forecasting group myself. And I talk, I think, more in where the Canadian dollar, what direction it's moving. So I wouldn't want to pin it down. I wouldn't think that it will average above par for all of 2010. I mean, we're already a third of the way through, more than a third of 2010, and so far it's been under. So I don't think it's going to average at par for 2010. I think it will sort of bounce around par for the summer. It's always going to bounce up and down, and you know, now this morning it was at 98 cents or something, 98.40. It's always going to bounce around, but I would not think that $1.05 is an unrealistic point for it to hit. I'd be surprised if it went to $1.10 and beyond, and if it did get that high, then I would suspect that, okay, now it's being driven more by speculation and not the fundamentals. And anytime you see speculative markets, they tend to go up quickly and then down when everyone bails out. So I would say, you know, around par to $1.05. Average for 2010 will probably be somewhere around 97, 98 cents.
Just one question. I can understand the driving force behind the banks when the Bank of Canada rate goes up. But just this week alone, you've got two of the banks, TD and Bank of Nova Scotia, raising their rates, mortgages and borrowing, whatnot. What's the driving force behind that if the Bank of Canada hasn't risen or increased their rates?
Yeah, that's a good question too. Well, the Bank of Canada, so it sets the overnight rate, which is the trend-setting rate for all these other borrowing rates in the economy, right? But what the Bank of Canada does, it only influences the other borrowing rates. It doesn't dictate what they are. So particularly when you look at, say, a 5-year fixed mortgage, and that's where the bulk of Canadians, do their borrowing in the mortgage market. It's that 5-year one. The banks and financial institutions, they go out to the 5-year bond market internationally or wherever, and that's where they borrow against to provide the funds for the 5-year fixed mortgages. 5-year Government of Canada, every government 5-year bond is rising already in rate. So the Bank of Canada, it influences, and everyone knows that they're going to be rising soon, the Bank of Canada, but it does not dictate what happens. Does that sort of make sense? So the banks are responding to the 5-year bond market, which is already rising in terms of interest.
I had one quick question just regarding there's some economists saying could be a possible housing bubble here in Canada with, like in Vancouver, housing, average mean price of a house is $1 million. And the value, I guess, of our housing market compared to the U.S. I'm just wondering if you had any kind of forecast on the possibility of that happening, especially with interest rates going up and everybody's into the housing market now fearing higher interest rates. So just your comments on that.
Yeah, so are we in a housing bubble? Well, bubbles are one of these interesting things. You never know you're in it until it bursts, and then looking back, it all seems obvious. I don't think we're in a housing bubble yet. And I think what's coming forward now will prevent us from getting in the bubble. If there were no interest rate increases coming, if mortgage rates were going to stay low, if the Government of Canada had not made some changes to borrowing and credit conditions, I would think that, we're heading towards a bubble. But now I see, okay, everyone, March and beginning of April, everyone was trying to get into the market before these rates are going up. There is going to be some tempering of the market going forward. I don't think it's going to slam on the brakes and throw, prices down $50,000 or anything like that. But I do think it will take some of the steam out of the housing market nationally for the rest of 2010. And overall, I think prices in 2010 will be pretty stable. Stable is the positive word. Flat is maybe the not so positive. Same thing, though. But basically, kind of flatlining for 2010.
Okay, I'm sorry. This is going to be the last question.
So. Okay.
Lucky me. I'll bring it back up to the international scale, and I have a very conservative attitude towards debt. I don't like it. I'm not good at it. And I see international countries, the United States especially, raising the level of debt per individual to such a level. It just seems insane to me. And can that be sustained, and for how long? You touched on it a little bit, but it really concerns me, and I'd like your perspective on that.
Yeah, it concerns me too. The level of government debt in the United States is, where they're at right now actually is about where Canada was in 1993. So they're about 70% debt to GDP level. And at that point, you might remember 1993, there was a lot of concern about, we can't keep spending at this rate. It's one of the reasons the Reform Party, they really sort of caught on to that wave of Canadian discontent. So after 1993, our debt level came down, and now it's about 30%. The U.S., unfortunately, they're already at 70%, and it is only going in a one-way direction, and that's higher. It's not sustainable. It definitely isn't good. It will result in, there's 3 ways you can deal ultimately with a high debt level. You can increase taxes. No one likes that. You can cut spending. No one likes that. Or you can inflate your way out of it. You can allow quietly more inflation to build in the economy. Inflation known as the stealthy robber. And if you inflate your way out of it, the value of your debt actually falls, because with inflated dollars, you're paying off a debt that was paid with lower price dollars. You don't really want any of those 3 things. My guess is that the U.S. will be tolerating higher inflation going forward. I think tax increases are inevitable for America. Not good for Canada when we look at our largest trading partner, probably going through 5 to 10 years of pretty sluggish, pretty slow growth. Not recession, but pretty slow growth with rising taxes. The interesting plus side, though, is that it's quite probable that Canada, within 3 to 5 years, we could find ourselves the low tax haven of North America here, where taxes are lower than in the United States across the board. Personal income tax, corporate taxes are already as lower than they are in the United States. So that actually could benefit Canada. We could see some reverse brain drain to north of the border, and we could see companies in the United States looking more favorably at a lower tax environment in Canada.
Well, thanks, Todd. You certainly did a good job of keeping economics after lunch interesting. Thanks for answering our questions. And I know Todd, his presentations are in high demand. He bounces all over the province, speaking to many different groups. So we were very fortunate to have him here today. So, of course, we'd like to show our appreciation. We've got a little token here for Todd. And Todd, we appreciate it.
Thank you so much.
Thanks a lot.
It's very kind of you. Thank you. Thank you very much.